Hi, Darin Mangum here, securities attorney. Today I wanted to post a quick little video that really geared toward potential clients and clients that are running their own private investment funds. Wanted to obviously, just lay out a few ground rules. Obviously, every investment fund is unique and every investment fund is different. But depending on the type of fund that you're setting up or running, obviously you want to be aware of some critical numbers. And I'm going to throw out a number of numbers, and I'll summarize these in the link in some of the links below, or some of the information in this video. But some of the exemptions I'm going to be talking about. But essentially, you want to be keeping certain numbers in mind as a hedge fund or a private investment fund. Again, most private investment funds qualify. They try to qualify under Section 3C1 of the Investment Company Act, which provides an exemption from registration as a fund, so long as you keep under 99 investors. Now, if you're a hedge fund and you're investing in stocks, publicly traded securities, obviously, you want to make sure your fund is 99 investors or fewer. Unless, however, if you're a fund that invests in private equities, you may be deemed a qualified venture capital fund. If you have less than $10 million in aggregate capital, then in that case you can bring in up to 249 investors into your fund without having to register. So that's a number to keep in mind. Obviously, if you are either real estate, if you're selling to qualified purchasers under Section 3C7, you can take as many qualified purchasers, and obviously those are super high net worth institutional type investors that have over $5 million in aggregate liquid securities, and so on and so forth. Those are not too common. Obviously, we're happy to represent those as well, but the vast majority of our clients are doing either real estate, which has an exemption under 3C5, or say oil and gas deals or programs that have claim an exemption under Section 3C9. In those cases, you want to definitely keep in mind the numbers. Even though you may not be subject to the 99 or the 249 limit for investors, you're still subject to the 34 Act. 34 Act kicks in when you have either 500 non-accredited investors of record, or obviously under Dodd-Frank you have over 2,000 investors of any kind. At that point, you would need to register. And so, again, vast majority, a lot of our clients are doing real estate funds, real estate investment funds, and so they often look to those exemptions. So anyway, that's kind of I know that's a lot of numbers and a lot of alphabet soup. I'll try to summarize those, briefly in the description below. But obviously, if we can help you with your investment fund, whether you have an existing investment fund or whether you're looking to set one up, we can certainly help you with that, making sure you're complying with all federal and state regulations. Thank you for watching, and hopefully this video is helpful. Thank you.